Let's talk about the importance of trading rules. Trading rules is going to be very important for you to take in consideration on every single trade. This is what's going to create your edge in trading. Now, right here, as you guys can see, I've left a couple examples of things that you can go ahead and incorporate in your trading rules. That way you can have a much better psychology, a much more better plan for when it comes to you executing your first trade. Now, as you can see, there's certain things that you want to take in consideration or that you can take in consideration. Now, depending on the things that you take in consideration are going to be based off of your trading rules and things that you have to see in order to place a trade. For example, we have right here confluence and time frames. That could be something that you can be looking into, right? What does that mean? That means that if you are looking at the 4 hour time frame for it to go bearish, okay, and you want to have a good entry, then you want to make sure that your lower time frames are also bearish. That way you can have that good entry and that continuation, that smooth continuation to the downside. That way you are not in drawdown for a very long time. Now, over here you may have a fib level. Now you may like to place your fib level so that way you can see where you want to go ahead and enter on a discount price, meaning that anything above 50% is something that's good and suitable for you taking control for a potential trade. Now, there's other things such as your MA, right? Your MA, your EMA, which are indicators, things that you can take in consideration to identify direction or just give you a better psychology, understand the market is either going down or going up. These are just extra indicators. These are just extra confirmation for you to take in consideration for your trading rules. Okay, it's very important for you to create trading rules. And until you see all your trading rules check off, then you enter that trade with a lot more confidence, right? So now your psychological section, what does that mean? Psychological levels, such as the 0.500, such as the whole numbers, such as the quarter numbers. These are things that you will be taking consideration later on in the future. For example, I like to use whole numbers, quarter numbers, and also half numbers for Euro USD, USD JPY, these type of pairs because they respect those levels very, very well. So that's another thing that I like to use in my trading, right? Now, price action, something very, very important. Now, the price action can be something that, for example, you like to look for tweezers or tops, you like to look for a bears engulfing, you like to look for a doji, you like to look for hammers. These type of price action are going to allow you to execute your trade. For example, until I see a price action pattern already created, until then I will trade. Before I will not. So this is a good indication for you to be able to be a lot more patient and take your trade once that is presented. RSI. What do I use the RSI for? I like to use RSI to identify divergence, to understand when market is overbought or oversold. This is very important for you to understand that if you are looking to use your RSI, you have to use it on the way that you like to use it. You like to see when it's overbought, oversold, or you like to see when there's divergence inside the market. You like to see this correlated with your price action. Do you like to see this correlated with your fib levels? Do you like to see this correlated with your MA? So there's a lot of things that you can mix and match right here. All you have to do is you have to create your own trading rule. Okay, now everybody's going to have their different trading rule, and it's going to be based off their psychology and on the way on how they perceive the market, because the way that I perceive the market is not going to be the same way that you perceive the market. That's just something that's going to happen. We can have the same views, we can see the markets at a support level, at a resistance level, so on and so on, but you may perceive it a little bit different, slight more different than I will. Okay, and vice versa. Now there's other things such as trend lines. Is the market trending, is it not trending, right? Resistance line, is market in a very huge area where market is repetitively rejected off of. Okay, so these are some of the trading rules that you can go ahead and implement. Go ahead and mix and match, go ahead and find your own trading rules, but at the end of the day, I want you to understand this, that you need a trading rule in order to be having a self-sufficient trading journey, right? You need to have your trading rules in order to create your own edge in trading. Without trading rules, you're not really doing anything here. You're just gambling, and we don't want you gambling. I don't want you gambling. I want to make sure that you have the proper tools to get to the next level. And making your trading rules is going to be the most important thing to take in consideration. Before placing your trade, before doing anything, you want to make a trading rule. Okay, you want to analyze the market. You want to see what works for you. Write them down. Put them in a notebook. Put them in front of you. That way you can see and check them off every single time you take a trade. Now, when things go wrong, you can go ahead and get some things out of it and incorporate new things. That way you can create and modify your trading rule based off what it is that you see and how you perceive the market. So with that being said, guys, I hope you guys enjoyed this quick little lesson of trading rules.